Hello, everyone. I'm Carrie Delgott, Wescott's Chief Operating Officer, and I'm here with Mark McCarron, our Chief Investment Officer. Great to see you, Mark.
Hi, Carrie. Good to see you as well.
Mark, as we look back at the roller coaster ride of 2021, a few key themes emerge. On a positive note, the economic recovery progressed despite some delays. And while we're experiencing some modest volatility, particularly the second half of the year, the US stock market set several record highs powered by the growing optimism for a full recovery in 2022. Playing a major factor in the recovery delay is the continuation of COVID-19 with its emerging variants. Many regions have instituted tighter masking policies and vaccine checks, and countries from around the world have again imposed travel restrictions. And then lastly, for the first time in many years, investors have been laser focused on rising interest rates and inflation, hitting particularly close to home for so many during the holiday season. So with that brief introduction, can I just turn it right over to you to expand on the 2021 themes?
Yeah, thank you, Carrie. I think you've hit the key themes, right on the head in 2021. If you look at the key driver of the economy and the stock market and the bond market, for that matter, it's been COVID-19 virus and all the variants associated with that. As we talked about in our last update, the Delta variant, which came really through in the September-October timeframe of 2021, was the latest wave, we thought at the time, and that was really delaying reopening and caused some uncertainty in the market. Well, here we are again, 3 or 4 months later, with another variant. The Omicron variant is starting to ramp up and cause a lot of new cases to be reported. Again, so the virus is still with us. The variants are difficult. The market's trying to figure out the importance of them, and we're actually seeing, more restrictions, as you mentioned before, just being put in place. Our view though is that the long-term impact of these latest variants is likely still to be modest, meaning we still think the economy is going to get through it. We think the stock market, will look through some of those threats. And that's really because there are indications that the current vaccines may be effective against the latest variants, and that's eased some concerns. The Omicron variant is still out there to be determined, but early evidence is that the vaccines and their boosters will have a positive effect. And that's really important, because if that can be addressed, then we can move on to the underlying, economy and the fundamentals behind it. So what's going on in the stock market? First of all, as you mentioned, Carrie, we're hitting all new highs in 2021, at least through mid-November, and actually late November, early December. Stock markets are optimistic. They're optimistic on that full recovery. Cyclical stocks that are a little bit more sensitive to the economic recovery, are the ones doing best this year. But what we're also showing here on the right-hand side is that the S&P 500, up 26% through December 16th, is posting yet another significantly strong year. That's after 2019 and 2020. So 3 years in a row of very strong returns despite the pandemic. We're also showing that the equal weighted benchmark, which is broader based, it's not as concentrated as the S&P 500, suggests that the market's broader and more companies are participating in that recovery. And that's good news for the market. It's also good news for Wescott portfolios. And we'll get into that. If you look at the value and growth on the large cap side, up 23 and 24%. If you look at small cap, 23% up on the value side. But what's very interesting is that inflation concerns and the likelihood of rising interest rates have really limited and had a negative impact on small companies, particularly growth companies on the biotech side, which are deemed to be a little bit more speculative. And why is that? Is that because, effectively these companies are depending on their earnings way out in the future. And if they don't generate earnings right now, that future earnings are really going to be discounted at a higher interest rate. And that's the risks associated with rising rates and rising inflation. It's impacting the more speculative side of the stock market. And that's really the nuance here that we're showing in the market. So despite a very strong return, there are pockets already in the stock market that are negatively impacted by what we're seeing right now in the inflation and interest rate sense. That's the stock market in the US. If you look at it versus the non-US markets, it's important to see really the driving factors here. First, the US stock market continues to be a strong performer. We're showing the 3-year returns for US, non-US developed and emerging market stocks in this graph. US stock markets really did benefit from the demand for technology over the last couple of years and very accommodative monetary policy, so low interest rates and supportive Fed. We're also seeing, since the pandemic, more and more support from the government. The latest has been the government spending bill, the infrastructure bill. All these things are helping the US. In contrast, non-US economies suffered really because of the new restrictions due to the variants of COVID-19 that has limited their growth potential. And emerging markets have suffered a little bit here too this year after a very strong 2020 due to increased regulation in China, which has slowed their domestic demand. So that being said, we still have a positive outlook on global markets, but the emerging markets and non-US developed markets have been weaker than the US going forward. But the inflation risks, the rising interest rate risks, the valuation risks are all present in the US stock market, and we want to be thoughtful about the balance of risk and return opportunities going forward. And let's take a look really quickly at the bond market and the impact of inflation. So you mentioned before, it's been a while since investors have been concerned about inflation. And the latest headline inflation figure came through. That's the US Consumer Price Index, or CPI. That came through nearly at 7%. That is a very high number, higher than it's been in decades. And what's driving that is a combination of pent-up demand for goods and a problem in the supply chain, inability to get new and orders in and through and to the customer. And that combination has really driven what we think is short-term inflation. The Fed's talked about transitory, or we do think it's going to be transitory to some degree. It's likely to moderate. For example, we don't think a 7% inflation rate is going to persist in the US going forward. We still think, though, that inflation may be a little bit elevated above the 2% level. And that's because when we all return to work, that's going to keep inflation and wages higher. That's a inflationary driver. What does that mean for markets? I think really importantly, the bond markets, which have been weak this year, may continue to be a little bit weaker next year as inflation and rates rise. And as we just talked about, small companies, growth stocks, a little more speculative, they may be under pressure next year as well because of those same trends. So that's what we see in 2021, and we're looking forward, obviously, to 2022 to see the key themes there.
Thanks, Mark. Great summary of the headlines. There's just so much intelligence coming at us to consume and digest. And while it's hard to believe that 2021 is quickly coming to a close, why don't you close us out today with our outlook for 2022, including how Wescott portfolios are positioned for the future?
Yeah, it's amazing how we are at the end of 2021 already. We are looking forward to the new year. We expect, first of all, that the global recovery will continue in 2022, despite some of these variants. We do think, though, that the pace will moderate, and it's because perhaps we're not fully out of the woods yet from the pandemic, but also we're expecting higher rates and higher inflation, which will be headwinds to growth, at least in the US. As we mentioned before, the COVID-19 pandemic and the related variants will be a source of uncertainty for the economy and for the markets. but any disruption we expect to be fairly temporary. So I think that's supportive of a continued commitment to long-term strategy. Inflation, that's going to be the big news item for 2022. We expect it to moderate from a 7% rate, but it will be higher than its 2% rate, which has been at or below for the last decade. And that's going to make the Fed become a little bit more restrictive, and that's going to be the source of the headwind for markets going forward, for stock markets and for bond markets. But what we're talking about here is a reflationary environment, which means rising rates, rising inflation, and Wescott portfolios have performed well in 2021. And these are the things that have been driving it. First of all, global equity portfolios tilted toward cheaper, smaller companies, a little bit more economically sensitive. Those tend to do better in inflationary environments. And we're also short maturity focused in our bond portfolio. And that also helps us hold up better than the bond market in a period of rising interest rates. We are looking at our bond strategy to determine whether there's things we can do to make them less sensitive and limit the impact of rising rates going forward. But really, those are the things that we're already positioned for, and we're seeing evidence historically in the last year that positioning has generated good, strong absolute returns and also good relative returns. So as we look forward to 2022, we are looking forward to a safe, happy, healthy new year. And that's the outlook for today, and we'll continue to keep you updated as to our thinking and what we're seeing in markets.
Thank you, Mark. I couldn't agree more. Looking forward to a safe, happy, and healthy new year. Great update. If you have any questions or would like to discuss any of the topics we've covered in our webinar updates, please feel free to reach out to Mark or your advisor. Happy holidays, and thanks for your trust in Wescott.